Yo, what's happening, guys? Thank you so much for joining me here today. Of course, we have another big day on the market, a lot of manipulation on the chart. As we can see here from the banter bubbles, a lot of volatility across the board. Going into this weekend, pretty easy to analyze the market, kind of get an idea of what's going to come. But during the weekend, we saw a lot of crazy volatility, especially coming into today, roughly around the time where MicroStrategy announced their addition to the U.S. Treasury and their treasury and no further purchases in Bitcoin. We saw a little bit of a spike for some reason. I don't know if that's the main reason, but that's the correlation that we're seeing, and just a lot of volatility across the board and amazing trading opportunities. I appreciate every single one of you guys being here. I have two big favors to ask. If you're not, part of the charts our dumb community, make sure that you subscribe. The button on top right doesn't work, so you just got to scroll down a little bit and hit the subscribe button, and then also just help us reach new people by spamming the like button. What's up, Johnny Gummy? How you doing, my friend? Good to see everyone here today. But yeah, I'm not going to waste too much time today. I'm going to get straight into the market, show you guys exactly what the next trades are. Of course, we'll dive into some of these tokens like Pump.Fun, what's happening on Bitcoin, because that's a little bit more of a tricky situation as it currently stands. But yeah, cool. So obviously, guys, we'll start there as we do with every single show. Bitcoin, kind of playing within this little weekend range that we set previously. The initial push towards the upside here did see quite a large collapse, and very similar to Ethereum. During that initial pull up in this side from the PCE, from the CPI shock, we've now obviously filled a lot of that inefficiency in the market towards the downside, right? And for those of you guys who don't know what I'm referring to, I'm referring to these little bad boys out here, which obviously have now come down and been filled towards that $62,750 region. If you have been following on Twitter, of course, guys, we've actually been nailing it pretty well, except for today's one. But generally speaking, watching the market, kind of identifying how these opportunities work, we looked at how we looked for a reaction here at about 64.7. We then got that reaction, saw the rejection from that point, then called for $63,000. Going back into this FVG zone right there, as you guys can see, came back, hit the FVG zone perfectly, and then from that said, okay, cool, now we should see a little bit of relief from this, the next major support being at 61.5, but going into the weekend, we should see a decent amount of relief, and as you guys obviously saw from that tweet, expecting that bottom to come in at that point, we then pushed back into the range high and formed a little bit of a lower time frame range, which is where Bitcoin is currently trading right now. Okay, so this was the previous range high now where Bitcoin's kind of playing around, and that's from this zone here. This is on obviously a higher time frame back into this level. There's a lot of uncertainty in the market around these two zones, which is obviously what makes it such a dangerous place to be trading because of the rejections that we're seeing from the level, the violent aggressive moves, the low volatility, the low volume consolidation periods that we obviously saw in the weekend. For me right now, guys, where we're trading on Bitcoin, we're obviously at a range high perspective. I do edge towards further downside, although looking at what we previously saw, we did see a major inefficiency over here on the initial break, creating a little bit of a liquidity gap. Right, a gap in the order books, whatever you will, and then obviously since have retraced and filled that zone, going in for that next attempt. The range low, obviously, as I said, is a little bit lower yet, about 61.5, which I do think is a strong possibility that we do retest there. And what we're effectively seeing here is the fill, the retest of the mid-range area, coming back into retest to this point here, where so far we're seeing immense amounts of volatility. For me right now, as far as Bitcoin goes, we're at that make or break point, because if we do see the rejection filling from this side, we're very likely to start that move towards the downside here. We do have on the higher time frame, or the mid time frame, yeah, I am looking at a 30-minute chart, so I'll jump to the 1 hour. We do have a little bit of a structure forming here as far as the price action goes, with our first low, higher low coming in here. Higher low, check out this app's generating shapes. And then obviously this now potentially being that next high low, which does indicate that the trend is on its way up. We do have a little bit of an ascending formation here, whereby we're dealing with a horizontal resistance, as you guys can see here. Generally speaking, when we do see something like that, there is a possibility or a probability of further upside first before sinking towards the downside here. The chart to me does look like a little bit of a swing failure, considering this formation that we're seeing on the upside here. Big break above, rejection from that point, little deviation formation, and now coming back into the zone where obviously Bitcoin's having a little bit of trouble, but breaking back and forth past that previous range high, right? It's an extremely, extremely volatile point in the market, right? A little bit worse than what we've seen previously, because naturally Bitcoin's actually just been ranging within this area. Now coming back, obviously, including the fact that we've seen pretty clear rejections from this point in the past, post the deviation, then coming back in for that rejection over here. Sorry, just give me 1 second to delete this and just copy this and paste it and move it over there. Cool. So we've had some pretty clear rejections prior, and now where we're currently sitting is a lot of volatility and a lot of uncertainty, right? From a regular trading perspective, a non-biased perspective, the way we look at this is we're currently trading at a resistance point. We're not looking to go too long from this point on, right? If we're in a long position, we want to take out a little bit of that position. Of course, given the fact that we did see that relief, I obviously cut out that position on about 2 days ago, so that's still fine for me. Where we're currently sitting now, I'm not going too deep into these long positions. From a risk to reward perspective, of course, we're looking at the low range or the break of the previous liquidity low in this section right there, currently at about $62,750 to be a little bit less accurate, but that's currently where we're looking at our potential risk zone. Of course, we could look at the 63,750 as well, but that's just part of the volatility, and what we've been seeing is massive, massive squeezes of those regions. For me, the trade currently looks like this, which is why I consider it a bit of a no man's land trade. And as you guys know, from that perspective, you never want to take a trade that's less than a 2-to-1 risk to reward, right? A 2R trade is really the sweet spot in terms of getting into positioning and really balancing your portfolio for that risk management, expecting to lose more than 50% of your trades. That next resistance point obviously comes at a slightly higher time frame resistance point or range high at this level here, where Bitcoin's currently trading, and what we're seeing on the extremely high time frame, it's just not enough buy pressure coming into these zones, right? It's just a slow consolidation at a massive macro key level, as we saw here with the consolidation going into that ETF, obviously the previous cycle high, a very, very big level for Bitcoin, and that's just that sideways consolidation where Bitcoin's currently hitting. Previous times, we've obviously seen a little bit more of a reaction from Bitcoin, a little bit more volatility, even going back into February of this year. And in this time, really trading within that no man's land, not creating a lot of space, not creating a lot of definitive price action in terms of volume. A big factor towards that narrative, and a reason for that. Of course, in the previous instance, you had the war, you have uncertainty around oil prices, the economy. Of course, what we're seeing now, a little bit above or below expectations, is what they're doing with inflation, what they're doing with what the PCE data is, being released. There's a big shift in terms of that, and I just don't think Bitcoin's at the top of that conversation and the top of that interest point for the rest of the market. So for me right now, this is just short-term consolidation. Any market pressure, any buy pressure that people are suggesting exists on Twitter is really not there. We look at it from a price action, and price action being the only truth. I just wouldn't touch Bitcoin right now. I do expect further downside still. I just think from a timing perspective, tying it into the 4-year cycle, looking at that October-November range for when we expect the bottom, the longer Bitcoin kind of wades out this market and kind of holds firm in these regions here where it's not interesting enough to buy and it's not interesting enough to sell, I think that, that bear market target of looking for that sub 30 becomes a little bit less realistic. That's, of course, in the event that we don't see a stock market turnover, right? When we do eventually see the stock market start to kind of unravel from this AI narrative, which I think is rather close. I'm not really willing to bet it's within the next 6 months, but I do think that the AI bubble is really, really at that point of bursting now. We're seeing a lot of shifts now. We're seeing a lot more expectations in terms of revenue based on these valuations. I think that when that happens, then Bitcoin obviously starts to feel a little bit of the pressure behind that stock market and traditional finance sell-off. Okay, obviously, guys, over the weekend there's been a little bit of escalations as far as the war goes. Iran has started to attack. This is obviously based on what I read. I am in the Middle East right now, so obviously I'm trying to keep a lot of attention to it to decide whether or not I need to get the fuck out of here again or whatever the case may be. But the war has escalated somewhat. I think that they've attacked, obviously, a lot of military bases. There's been casualties on the civilian side, I believe, as well as the US Army side, which generally does lead to a further escalation. We saw oil prices go above $90 again today from that local bottom of about 72. Since then, has come down a little bit. Since then, we have seen little posts on the internet about potential discussions kicking up or a diplomatic approach, as per se. But after Iran's attack on water desalination plants and civilian infrastructure, it just seems like there may be an escalation on the rise. Obviously, what that really affects is oil prices, and then the effects on inflation, and all of those narratives start to kind of pick up again. Bitcoin, however, in the last major part of escalation in this war, outperformed, right? It actually marked the bottom for Bitcoin. I don't necessarily think it's going to have a drastic effect on crypto unless it obviously violently escalates. We know that in 2022, one of the big narratives outside of the FTX collapse, that was a little bit later in the bear cycle, the Luna collapse, which was quite early in it, roughly about February, we had the Ukraine war as well, and that did kind of create a little bit of sell pressure when that escalated to that point. I'm not sure if we'll see something like that. Previous market, it was just a little bit of back and forth in terms of attacking, but a full-scale war, I mean, we'll see what happens in terms of that. It's just keeping you guys up to date. Obviously not very politically inclined, but I did kind of bait the thing around the rising prices of oil and how the market's potentially pricing in a bit of an escalation. Of course, very, very expensive oil for the US is pretty detrimental to the average consumer. So, yeah, we'll see how that plays out, and that just generally has an effect on risk markets, obviously the further that goes up. So we'll keep a close eye on that and the war, and I'll let you guys know what happens from this side, right? In the middle of the action. No, not yet. Hopefully not this time around. What do you think of owning physical gold? I think gold just generally is a decent investment, right? It's similar to the S&P 500 in a lot of ways, that you don't really see a world where gold's gonna lose all its value, right? It's a pretty solid store of value. Historically, it's been stable, right, in terms of its uptrend. You find a gold mine or two, but generally over time, it just becomes a rarer and rarer commodity. They've spoken about auditing Fort Knox a few times, and if the gold is less there than they claim, that could create massive volatility either towards the upside or downside. Time will tell. If they don't have, then it's a much scarcer asset than they previously claimed, or there could just be a massive problem with the holdings, right? So I'm very interested to see how that plays out, if it does at all. But yeah, gold is similar to the S&P 500. Over a long enough period of time, you will make money. Physical gold? No, I think initially the whole idea of physical gold is why Bitcoin was built as far as the store of value goes, right? You have your peer-to-peer transacting network. That was just, the technology was never going to remain on top. As far as Bitcoin goes, that's pretty much the problem that it solves. And that's really the ability to move your assets in case of anything going wrong. And I think 1 ounce gold coins, yeah, I don't know. I don't like the idea of carrying such a liability in person, if that makes sense. I don't know. That's completely up to you. I'll talk about Hyperliquid as well. It's one of the tokens we're going to look at today. But yeah, guys, make sure, the guys who just joined, everyone that's here today, make sure that you hit the like button, you spam the like button. Just say what's up in chat. Just let the guys know that we're active. We have an active chat and the community is growing. Obviously, there's just so much work that I'm currently doing, and I keep making commitments to do the shows, and Friday I had to cancel a show. So I am sorry about that, but we're just kind of setting up all the companies and stuff. There's a lot of tax stuff. There's a lot of contracts and all this crazy shit that needs to get through. So there's like this little rough period right now where even myself, I'm not really able to hit the lower time frame charts, but I am getting through it. And I do think that this week we're finally going to be out in the open, but I have said it before. And then obviously can take this a lot more serious. Make sure you subscribe. Make sure you're liking. I'm going to get the cameras on and everything like that this week as well. Johnny Gummy says, what's your thoughts on Hyperliquid? Let's get straight into it. Very, very strange one. Obviously, the way we looked at Hyperliquid prior was a bit of a trend break here, which obviously took precedent against a few... President? Is it president? Or whatever. It took priority, let's put it that way, against our previous analysis on the asset, right? We looked at it as, okay, cool, maybe on Hyperliquid we're seeing a little bit of a PO3 structure. It was pretty textbook as far as that goes, but effectively what ended up happening here on Hyperliquid was a trend break reigning supreme, right? That was effectively as simple as it was in terms of a trading strategy. We had the trend going towards the upside here, a little bit of an ascending triangle formation. Our first indication of the slowdown in buy pressure was the lower high coming out here, right? This is the formation that we're looking at. Here's your little resistance point right there. Our first indication that things were starting to slow down as far as Hyperliquid goes, at least on a lower time frame perspective, was the lower high formation here, right? Which is generally speaking a break of trend, a break of structure, an early indication that buying momentum is sinking. We initially analyzed it as the ascending triangle, looking for this formation, then coming back in, and then inevitably pushing past this point into your 80 zones, potentially 90, even $100 for Hyperliquid. But effectively, this was our first early indication that not breaking this previous high or reaching that resistance point led to that further downside. We obviously had the bearish close there, and then coming back in for a pure retest of trend. We've now obviously closed below this region here as far as the daily close. I don't think we've wicked it yet, or we slightly wicked it by a couple of cents, but effectively that daily close, if we're looking at it from a line chart perspective, we've obviously seen a little bit of a structural shift here. Massive inefficiency right there on the lower time frame. Digging it back into the hourly right now as Hyperliquid stands. I think there's a good chance that we do see a little bit of relief into these higher zones of about $64, filling out a lot of the inefficiency towards the upside here, and I'll mark them out for you right here. Right, this whole area here, as far as the hourly goes, you go to a 4 hour, it will kind of conjoin into one big red candle. I think there's a good chance that we see a little bit of relief as the market is pushing up right now. Relatively speaking, Hyperliquid a little bit far behind, but we could easily see that little squeeze up into $64 prior to continuing that move towards the downside. But all in all, obviously, this breaker structure, I do think on a shorter time frame, we will likely see that initial $54 target that we were looking at for Hyperliquid, right? And that's obviously just playing out the range here. And that's just looking at this from a sideways consolidation. Higher time frame, of course, we still stand massive probability to break up higher, especially since the relative performance that we've seen here. But currently what I'm looking at here, on a worse, more bearish case scenario, I think we'll see something like this. Obviously, after retesting up into these points, and then even potentially squeeze out these levels and kind of retest that sub 50 point into this order block right here after that massive squeeze towards the upside here. I think that's something that's very possible for Hyperliquid in the near future, and then we can potentially assess driving that back up to the range high of about $76 on Hyperliquid. Sol USDC, let's have a look and see what's happening over here. Solana is also a quiet one. As I've said with Solana in the past, you don't necessarily want to be touching the asset below $80. That is a massive risk-to-reward failure as far as that goes. We look at Solana from a 1 day. Let's actually look at it from a 3 day perspective. 3 day. Do I have 3 day? I swear I should have 3 day. Okay, whatever. We'll do 1 day for now. Where Solana is currently trading is in that major danger zone, that liquidity gap between 80 and $40 or sub $40 if you're nasty. But where we're currently trading here, we had the opportunity to reclaim there. We'll look at it from a weekly perspective. Solana did not take above that $80. We saw 2 weekly rejections here. We're seeing a little bit of buy pressure alongside of the rest of the market, but Solana for me is a no-touch asset until we break and reclaim that $80 zone for that next potential squeeze towards the upside there. Okay, so as far as Solana goes, not really interested in it. If you're buying spot, it's okay at $77. I personally think it's very high valued. And just based on where the asset's trading now, as far as the liquidity gap goes, or the macro liquidity gap goes, you got to be extremely careful for that potential 50% pullback, because it's an extremely dangerous zone to be aping into the asset at this point. And a lot of people are getting bullish behind Solana, right? The narrative is starting to heat up about how Solana is, especially after Robinhood's release that, no other layer 1 is really necessary in the environment of Solana. Long term, I think probably $77 ends up being pretty good. But if you consider yourself more risk averse and not necessarily looking at the long term and the 10-year recovery plan of crypto, then you know, and you don't want to risk that 50% downside. I'd wait for a clean reclaim of $80, and then we can possibly have a conversation about that further upside target. I don't think there's going to be and obviously from a line in the sand perspective as to where you look at Solana as a dead protocol is very difficult to assess from that point, right? In any bubble formation, especially looking at crypto and what crypto has been like, or what we've seen previously out of what we've seen in these crypto markets and these insane valuations, very similar to what we're seeing in the AI bubble right now. There's no telling at what point that bubble will have finished popping, so to speak, right? I think long enough term, the Solana, if blockchain technology is around, I don't see a world that Solana doesn't survive with it. So Solana is really a bet on blockchain, decentralized finance as a technology stack over just for investing into it as a protocol. If there is a crypto bubble-like collapse whereby these valuations are determined to be extremely, extremely unrealistic based on the revenue and adoption in the space, and that's obviously Bitcoin going sub 20K, we could easily see a sub $10 Solana. And then in that place, you really look at it from whether or not you believe in crypto technology in general. And if you say yes, then you just kind of buy and wait to see what happens over an extended period of time for Solana. But yeah, that's that. Ethereum USDC, very important chart here. Obviously, very, very similar regard to what we saw in Bitcoin in terms of its retest there. Very, very clean. This is the value of order blocks, guys. Fair value gaps. Very, very important strategy to learn. When we see these massive volumetric candles entering the market towards the upside or downside, we obviously have what's known as an inefficiency or a fair value gap. And in this example here, you get the perfect retest of that point before moving up another 5%. It is a age-old tested strategy, guys. It's an amazing, amazing tool to identify. It is price action 101. It's whatever you want to refer to it, but it's an important strategy there. Any single time we get these massive volumetric candles, we look for a retest into the zone, filling out a huge portion of the move before any significant further upside. It generally creates a massive inefficiency. We see it over here as well. I'm just looking for as many examples as I can show you guys. And boom, once that's filled, we get a nice recovery in the market, especially if that move is supported by enough volume to sustain further upside. Where Ethereum's currently trading now is also at a resistance point. As you guys know, we're just looking at this little lower time frame resistance point over here. Right? For me, guys, as far as the market goes from a trade perspective, the two things I would be looking at right now is short positions. Right? Sorry, that's what I meant to say. The only things I would be considering right now are short positions. I wouldn't necessarily be going, I wouldn't look at any long positions from these points where we're trading right now. Strong rejections from the point. We've had strong rejections in the past. I think that this little relief sub swing failure above the range higher, clearly seeing a little bit of slowdown in the Ethereum momentum. You can tie in a higher time frame trend. Looking at the 4-hour here, I would look at something like this. Right? That kind of being your validation point, your little liquidity build up over time. Once we start to see that structure break, a lower high forming on this front would obviously suggest an early reversal sign, very similar to what we saw in Hyperliquid a little bit earlier. Positioning yourself here for some further downside really does tend to make sense for me. And then we could easily come back towards these lower ranges over here. But Bitcoin needs to play ball. We need to see the Bitcoin rejection as well. And I think Ethereum will actually be a slightly lagging in terms of the trend line and how that's forming. I think that Bitcoin, where it's standing now, will give an early indication of what we can expect for Ethereum. Lower time frame, of course, we have a whole bunch of resistances on the way down. If we take the volume range profile from this range right there, we have a few levels between coming into about 1,750, which is still decent risk to reward. We have obviously this range low over here, about 1,700, and then the potential squeeze zone at about 1,650. I think Ethereum is sitting more on the bearish side of the market there, and a good potential short towards the downside. It is something that I'm personally looking at on a main account perspective. Someone said Jupiter USDC, and then we're going to look at pump.fun. Okay, Jupiter. Jupiter as an asset on Solana, we're obviously seeing relative slowdown as we're seeing in Solana against the rest of the market. The assets, I'm assuming the entire, what do you call it? The entire chains market, this entire Solana chain asset list is going to be a little bit in that wait for Solana to react period. Obviously, Solana breaking above $80 creates, or acts as a proxy for a lot of these Solana-based tokens, like Jupiter being the biggest DEX, or Radium being the biggest DEX, and Jupiter close second. A lot of these assets just seem to move off the back of that. This is a good retest point. We're obviously playing around with a little bit of a range low period over here. We're not seeing a lot of sell pressure. We're not seeing a lot of structural break. From that perspective, I think that Jupiter looks pretty good. This would be a hedge against the rest of the market. Solana starts to show strength. Obviously, I'd look for some opportunity as far as Jupiter goes, and as far as Jupiter goes as an asset on the chain. One of the tokens that are performing really well, clean segue, USDC is Pump. Pump.fun is going pretty well. This was a pretty solid prediction here on Pump.fun, and did see quite a massive move towards the upside. Lower time frame here, we do seem to be flagging down a little bit, which is great. When we look at that from a measure move perspective, it does look as if Pump.fun has some further upside potential, but currently are hitting a pretty strong resistance point. We do have a few levels towards the upside here. I think it's short-term driven, right? As I said, there was a little bit of excitement around the memes. I think that's already starting to slow down. And I know Ansem started posting a lot about Pump.fun. We do have some pretty aggressive fair value gap towards the downside. These massive volumetric candles here can be quite dangerous for the asset. We also have these unfilled ones towards the downside. I think it's a very, very short-term move. Right now, long into resistance just seems a little bit dangerous to me, and the further upside above that, another 10% squeeze, very, very low time. You want to kind of watch out for this little flag formation that we're clearly seeing here. That's just a relatively basic structure there, right? Not something I generally trade on, but just for anyone that is watching out on the Pump.fun, narrative, coming back down towards these 18.5 zones, we could definitely see something, coming back into these levels here, and then potentially moving up there. Yeah, like I said, not necessarily my trading strategy, but definitely worth paying attention to. I just wanted to take a look at Brent. I was looking at it this morning. Yeah, extremely volatile. We did see a massive push post-weekend there. Also a little flag formation, right? A little measured move there of about 10% towards the upside. Pretty solid, pretty textbook as far as that goes. Now currently looking like a little bit of a retrace. Came back, dodged the order block that was built up on that side, and a little bit of a deviation below that point. I think that from a technical analysis point of view, very, very easy short position here on Brent. You can trade it on Hyperliquid. I don't have a referral link for you, so just do whatever you need to get it. I think also other exchanges have Brent and oil trades in general, but just to bear in mind there, this is from a technical analysis perspective. We also have massive news that actually is driving a lot of the price action in the asset. If you're a news trader, there's no better place to be than Brent oil right now, right? You can make a lot of money just watching tweets, watching the Trump account, whatever you need to be. If you're on Banter's 247 terminal, another big one, you could really be making a lot of money in these environments during the war escalation, which sounds like a horrible thing, but I'm just telling you where there is money to be made during these periods. Watching that news, watching for the escalation, anything that Trump says can really drive a lot of the price action in these assets. And that's really what we saw in terms of a top, and then obviously forming in terms of a bottom where the memorandum of understanding was actually broken. That's where we saw a bottom formation here on crude oil as well. On Brent oil. Guys, thank you so much for joining me here today. I hope you enjoyed the show as much as I did presenting it. I'm back. We're going to bring it back up again, trying to be more consistent and really drive a lot more quality shows. But yeah, just stick around with me, guys. Make sure to DM me anything on Twitter, comment on any post, comment on this video. If you have any questions, make sure you like it, and make sure you're dropping a subscribe if you have the time. Much love to you guys. Stay safe, trade safe, and I'll catch you guys on the next one. Much love, guys.